Well, good morning or good afternoon, I guess, if you're on the East Coast or anywhere else in the world. How's everybody doing? Get things shifted around here real quick a little bit. There is the camera. You see my bright red shirt today. Can y'all hear me loud and clear? All right, awesome. Thanks, Kevin. Good morning, Helen. Good morning, good morning, good morning. It is a good morning, isn't it? Thank you, Les. How are we doing? It'd be a better morning if things had dropped just a little bit more. I'm right on the edge of having like 2 or 3 orders trigger. So if you see me turn around staring at it, Tesla's about to hit. So if you hear it ding, I'll probably turn around and look at it, but I probably shouldn't, right? But it's super close. I got IBM and Tesla both right on the edge of triggering. Tesla is just beautiful. Anyway, I'll try to focus. Welcome out to Trading Coach's Playbook. My name is Tony Benson. If we haven't met, we're going to have a little bit of fun. I am, at least. Hopefully you're with me. But before we get too far down this path, let's get the disclaimer out of the way. I am not a registered broker-dealer investment advisor. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If we do happen to mention a trade, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. So, quick review of what's coming up in the next week or two. The first one there on the list, I'm a little biased, but I think it's one of the best. No, I'm just kidding. Everybody's good. There's all of us are have a lot of fun. At least I do. So, Patterns of Flash Q&A is next week. That is October 12th. Thank you, Miguel. If you have not experienced Patterns in a Flash, or if this is the first time you've been with me, then you can jump on the 2-week trial and come out and join me. That's 1 hour exclusive for Patterns in Flash subscribers. So if you have that tool, you can be there next, I think that's Wednesday, if I remember right. And we'll spend an hour looking at charts and doing whatever we want. If you have trades you want me to look at, charts you want me to look at, we can analyze them and I can give you my opinion. So we're gonna do a lot of that here today too. So join me there. Like I said, you can jump on the 2-week trial, check out the tool. I will mention it throughout here occasionally. We'll probably use it a little bit as well. The Wealth of Spreads is the 13th, the day after. And then Trading News the 26th. I believe I'm doing that as well. I think that's on my calendar. Mastermind Trading Groups is Tuesdays. And then the free online workshops, Power Hour, Trading Coach's Playbook, what we're doing now. How not to get your beep kicked. I want to see that one, actually. It should be interesting. And then Power Option Plays, Tuesdays and Saturday, Cover Call Explorer Thursdays, and then E-Mini Think Tank with Brandon Monday, Wednesday, and Thursday. So that is the schedule for what's coming up soon. And then, of course, you can find us on all the social media platforms. And if you have not experienced, like I said, Patterns in a Flash, that is a tool I created. The entire purpose of it is to train your eyes to see the patterns and then also train you to know what to do with them once you find them. So it is, there's about 8 hours of on-demand video. It is all on demand. You got the flashcards, you've got quizzes. There's a calculator in there. So lots to play with in there. So, but what are we going to talk about today? You should have all gotten the email that said we were going to talk about that right there, which is kind of my nemesis, as you can tell, as I keep turning around looking. I should just wait till it dings, right? We shall see. Is there anybody else in here that struggles with patience, or is it just me? Because I hear a lot of people make comments and say things, and everybody wants to get wealthy tomorrow, right? You want to get in your trade now. You want to collect your profit 30 seconds from now. You don't want to wait for it to play out and develop. And sometimes you get some big swings to the upside that are frustrating and aggravating, and you watch all your profits disappear for a couple of days. And then all of a sudden it turns around and tanks back down and your puts are now paying off. Sometimes it just takes patience to letting things play out the way they're supposed to, right? Because the reality is the market doesn't work on your schedule unless you have some magic. If you do, then let me know. It will give you the results it wants in its own time. And this has been a struggle for me since day one. I started, actually, it's been 22 and a half years exactly, 22 and a half years and 4 days. And I always hate having to get into a trade and wait for everything to play out. That's one reason there's so many people that love day trading, right? You don't have to wait. You get in and out quickly. But day trading is also difficult. All trading is difficult. Generically speaking, the shorter time frame you squeeze it into, the more difficult it becomes. Your timing has to be impeccable. If you're trying to get in and out of a trade in 5 minutes and make a profit consistently, you better be spot on a lot. So trading over a 20-year period, that's why a lot of people buy and hold or they invest for the long term, because you don't have to have spectacular skills, right? How hard is it to buy something? And especially if it's a good, solid company that, over a 5 or 10 or 20-year period is most likely going to have profitability and grow over time. So it's not difficult. But if you get down to position trading, which is typically a week to a few months, you get down to swing trading, which is 3 to 5 days typically, and you squeeze it into day trading, it becomes even more and more difficult. So you've got to decide where you want to be and how patient you want to be. Does anybody else struggle with this too? Letting the trade come to you? You jump in early and say, okay, I want to get in before I miss it. I kind of did that this morning on one, but then again, how do you know? It hit my entry point. That, well, it'll probably pop back up a little bit, but I pulled the trigger anyway, and now it popped back up and I'm underwater a little bit, but it's not that big of a deal. Sometimes it's good to be patient and wait for the trade to come to you. Because how many of you have gotten into a trade and you go, I should have waited? And part of that's just the nature of the beast, right? You're gonna pull the trigger early on trades a lot of the time, and things are gonna move against you right after you get in. It's not that uncommon. It's being patient enough to wait for it to come back and do its thing and letting the pattern play out, right? This is one that is, here's what a lot of people have had in the last couple of years. And this is what a lot of people experienced in the 90s and even in the run up to 2008. Your account should look like a stock chart, right? This is what a lot of people's account looks like, especially for those newbies that got started in 2020. And no offense if you're a newbie and you got started, but most people start off with the bullish side. That's all they know. That's all they trade. And buy the dip when things are bullish works, right? And so people, especially after the crash in 2020 and everybody started piling money into the market, buy the dip was working beautifully. And this middle part of that chart, that's probably what your account may have looked like. And then all of a sudden, January of last year, some stocks like Peloton peaked out and started to crash. Some of the other smaller, littler, newer companies started to crash. And then January of this year, right? So you probably gave back a bunch of your profits. Boom, and your account crashes. And then it bounces back a little bit. And then January of this year, everything started to tank. Everything started to catch up. The big names even started to trend lower. And then your account goes like this, and you're down back to almost where you started. Where what you really want to have is that right there. This is what your account value should be looking like, right? And you're going to have some, and I know it's frustrating. It's always nice to get in, have it grow a bunch, and you have a week of big move, and your account goes from 30 grand to 40 grand. Then you're happy. And then the week later, it's at 35. There comes the kitty. Having those drawdowns is normal. And sometimes it's a matter of, oh my gosh, I don't know if you can see her back there. She decided to say, she likes to come over and scratch at the screens. I don't know why. And the machine that I'm doing the web shop on, I don't care if she does, but that one back there, that's not a cheap monitor. So she likes to dig on it for whatever reason. I don't know. Anyway, so you're going to have those drawdowns, right? And sometimes it's having the patience to hold back. And this is what a normal account, if you're charting right and if you're trading properly, this is what it should like. You have a nice steady set of uptrends. Maybe you have a few months where it goes sideways, and then you bolt real quick, and then it drops off a little bit. So that's what would be normal, right? But here are some little tips. Has anybody ever done this? Traded too much, where you're in and out a lot, or you're getting into things and you should be waiting. It's easy to do, especially when you're new. because you just want to be in sometimes, right? You just want to be in the action. Any poker players here? As if you've ever played poker, and if you've done it for a long time, which I've been, going on 30 years now, since I started playing poker in a casino. And I play once in a while. I don't play as much as I'd like to, but life's busy. But I look back when I first started playing poker, and I played way too many hands. I'd play hands that weren't that strong. They were weak, or I would stay in a hand with hope that the one card that's in the deck that I need is going to pop up and I'm going to win a big pot. It's the same thing in trading, right? Trading and poker are pretty much parallels. It's pretty interesting when you look at the two. So if you're a poker player, you understand the concepts and the principles of trading because they're basically the same. And in poker, if you're sitting at the table, you want to sit and wait for the right hand, right? You want aces, kings, queens, ace, king, ace, queen suited. Those are the premium hands, and those give you the best odds. And you sit and wait and wait and wait until you get a hand that's good enough to play. Then you have to look at other factors. What position am I in? How much is what's the bet? What are the other players like, right? And then the psychology part comes into it. And it's a lot of fun, actually. If you haven't played poker, you can play it online for free, right? Just for fun. But if you want to take that, and I've used a lot of the skills I learned from playing poker and translated them into trading. And the one thing that I did in poker was I overplayed. I played too many hands, and I didn't wait for the good hands. And then I also didn't get rid of the hands when I had when I believed that I was beat. I just hung on to it, hoping that long shot card would come out. Anybody ever done that trading where you get into a trade and it goes against you and you decide not to get out? You keep hanging on with hope and you keep playing it and you keep waiting for it to, and then you're like, okay, I know the odds are stacked against me, but let me just hang on and wait and hope. Same thing, right? But one of the things I struggle with in poker was overplaying. And in trading, I did the same thing. I've overtraded. So don't do that. And be patient with yourself. If you're new to this business, if you're new to this game, it is not easy. It is relatively simple once you understand it. Understanding the concepts is not difficult, but doing it in an effective, profitable way is very challenging. Be patient with yourself. Don't be anxious to get from where you're at to where you want to be in 6 months, a year. It takes time. It takes a lot of practice and a lot of skill development. So be patient with yourself. Because in reality, when you get to that place, and I don't know where each of you are at in your journey of life as far as age and retirement and how much you're working with, all that stuff. The reality is that once you develop the skills of trading and you get good at it, then you will never have to worry about retirement, right? So many people, and I mean a lot of people, that they're concerned with how are they going to retire because they're on this old traditional path of, wow, what was that? I don't know if you all heard that, but that was loud. They're on the old traditional path of, right, save a bunch of money, invest for the long term, and have, $1 million, $2 million in a nest egg for you to retire with. Right. And then you can live comfortably on, $5,000 or $6,000 a month or whatever you need. But if you take the time and you put in the energy and you learn the skills of trading, then you can retire comfortably on $100,000, $200,000 if you know how to utilize it well. Right. Oh, goodness. That's what I was waiting for. So, any questions about any of that? I think that is, yep. Now we are going to go spend the rest of the time looking at some charts. Unless y'all have a question, comments, anything at all. I'm going to do a quick update here. And no, I don't want to update those. If y'all have stocks you want to look at and start throwing them in there is, oh no, we don't have to look at IBM today, do we? Oh, Karen. Why do you want to look at Tesla? Just tell me you have puts. Just tell me you played the double top from a few weeks ago. So one of the things I'm going to do a shameless plug here is, so if you haven't had Patterns and Flash, this is it. The pattern of the week. That was, what day was that? 8/19 should be about that. I think this is it here. So once a week, typically it comes out on Friday. Yeah, that's it. So there's Tesla. This is the day we were looking at it. I was pointing out that we had a double top. And looking at it, and there's the trading plan, right? So this is the video. That's a snapshot of the video from 8/18 is when that was updated. That's that vertical line. Well, I guess it's one before that. It's right there. That's the 18th. It was off a day. But that was the day I highlighted it in the pattern of the week. I said, Tesla has a double top. If it breaks down, I'm looking at it here. I love to try to catch a little bit. If it's at the double top and it's starting to move down, I love to nibble on it. And this trading plan's actually changed from what that was. Because I think, shoot, I should have left that open, huh?
Aggressive place to get.
Yeah, so there it is. So there was a very different trading plan on it. This has been adapted since it came down and we created a triple top. But we had the double top form right there, broke the midpoint right here, which actually was a kind of a false breakout. It really was. Because I remember I picked up a little piece here at the beginning of the double top, and I love to do that. I nibble, right? And those of you that know me, I'll pick up just 1 or 2 contracts, and then I'll add to it if it keeps going, right? How many of you just dive into a pool if you don't know if it's hot or cold, right? You stick your toe in the water. It's a double top. It's not been confirmed. It's just barely forming. It's a very, very aggressive place to enter. I'm not going to just dive in head first, hoping that the water's warm. I nibble on it. I stick my toe in. Okay, give me just 1 or 2 contracts, maybe 3. And then it dropped off, and I can't remember everything I did as far as getting in and out, but I've been in and out of this several times. I think I got into one there and took out some of it here. I added to it here. And then I remember getting into this. I already had some profit on the overall position and stopped out here on part of it. I left one there, and then I added to it back up in here. And I've been in and out several times. But where I was at right now, I was down to 3 contracts. And my cost basis on them was somewhere around $9. And one of them just triggered for 23. So I've got almost, if this other one, I have one order out for 27. So if it hits, I've got all my initial capital plus, I don't know, $2,000 or $3,000 of profit. And it wasn't even a huge trade. And then I'm going to leave the one contract there to hold because earnings comes out on, I believe, the 19th on Tesla. So I'm going to leave that one there because I have all my profit. I have all my initial capital plus a healthy profit, probably 40 to 60% profit, if not more. I haven't even run the numbers. And honestly, I really don't care. I don't really analyze things like that. And then I can hang on to one. And if earnings comes out and they say awful things, if they come out and warn like FedEx did, now I got a home run, right? So anyway, sorry, Karen, I didn't mean to get too far off on that. A little bit of pat myself on the back. But it's fun when you have something that works this well. I'm not, I would say this a lot. I'm not trying to brag. It's just that maybe I am. I don't know. What is your question about? Okay, there's the question. I was wondering what you're looking for on Tesla. I believe I have the Decembers. I'm pretty sure I have the Decembers. And I went way out of the money because I usually go for the target and sometimes beyond. I originally, I think, started with the Novembers. I think the first few contracts that I did were Novembers. And then over in this area, when it came up and started to hit that triple top, I switched to the Decembers because November wasn't a whole lot of time, right? Because I was buying out of the money. And with the market moving like it has been, that's most of the time what I'm doing, especially on the big volatile ones, because then you get the delta flip, right? If you're buying an option that has a 25 or 30 delta, and then it really tanks, and you get to at the money, right? Because the most expensive premium is at the money, correct? So if you buy a cheap time value that's out of the money, and then it goes to at the money, You bought it when it's cheap, and if you can sell it when it's at the money, then you're selling it at the most expensive time premium there is, right? So you get that delta flip. Now, normal market conditions, I go 4 to 6 months out. Lately, I've pushed that up a little bit to like 3 to 4 months, sometimes 2, but that's pretty rare. Because when you go out of the money, you're buying all the time, right? So you should have more time. If it's a short-term trade, I'll go in the money. If it's 1 month or 2 months, I'll go in the money. So it just depends. But with the big moves we've been having with the volatility, the out of the money trades are working beautifully right now. And they happen fast. So that's why I've shortened the time frame a little bit, just because of the market conditions. But as far as what to do with Tesla from here, I wouldn't do anything. I wouldn't add to my position. I wouldn't get into anything put wise right here. And this is the interesting part. That's a weekly chart of Tesla. That's a massive head and shoulders. Whether or not it plays out, it would take probably quite a bit of time. And if the market conditions continue to deteriorate like they have been, then it wouldn't be a massive surprise to see this actually play out and see Tesla come all the way back down to 50 or 75 bucks or 100 or 125. Hard to say, right? We never ever know. So trade what you see, not what you think. And that's hard to do because we always like to think certain things are going to happen. How many of you thought the market was going to go down if unemployment came in better than expected today? Are we all a little bit stunned by that? Like, wait a minute, unemployment went down and the market's tanking? Anybody make sense of that? Because I know some of you are like, it doesn't make sense. Except that the market right now is focused on inflation and what the Fed's doing. The Fed's raising rate. They're doing QT, right? They're tightening, which slows the economy down. And low unemployment tells the Fed that they need to keep hiking rates. I was actually surprised. I expected unemployment to tick up. I was surprised that it came in lower than expected. I'm not surprised at the reaction of the market. But that's the weird thing, is the market sometimes does the opposite of what you would think. You know, the intuitive thing that you think it would do. Unemployment's good, because a lot of these news outlets are saying, well, unemployment is low. That means we're not in a recession. No. Every single recession that we've been in, when it starts, when you go back and look historically, at the beginning of the recession is when unemployment is the lowest. In fact, that's actually, if you're looking at it, that's a telltale sign that we're in a recession, because unemployment is a major lagging indicator. I mean, like 3 to 6, if not 12 months behind, because companies don't cut back. And part of the reason a lot of companies haven't cut back yet is because the labor market is tight. And so they're not laying people off because they're afraid that if they lay people off, then they won't have the staff, then they have to rehire, and it's a nightmare, right? So they're hanging on to people longer than maybe they need to. So, but with regard to Tesla, getting back to it, that's a tough one with where it is right now as far as what to do with it at this moment. I got a little bit braggy about what I have done. I mean, it might bounce there. There's that, it's a short-term trend line. But I don't know if are you looking to play it bullish or looking to play it bearish? If you're looking to play it bearish, either way is tough, honestly, from where it is, because it's already gotten hammered and it could keep going. The challenge to buying puts when you've already had a move like this is that the odds are stacked against you because it's already moved so much that it's likely to have some kind of bounce. At least that's what the odds are, right? Stocks don't usually just fall off a cliff. They do. But do you want to try to catch it halfway down and then have it bounce? Because then you get hit really hard typically. But if it does keep crashing, then obviously that's great. But the challenge right now is that the implied volatility, because this thing is in the middle of a tank, the implied volatility is going to be relatively high. So the only way you're going to make, if you were to get inputs on Tesla right now, the only way you're going to make money is if this thing really continues to crash. Because if it slows down and just stalls out, you're going to get beat up. because the options are going to be beefed up with time value, right? They're going to blow that arrow in the balloon. The air is already in the balloon because of how far it's fallen, how quickly. The volatility is high. So you're going to pay a heavy premium for a Tesla put or a Tesla call. That's the other challenging part, is if you try to buy a call on this right now and the implied volatility is inflated, the market makers have fluffed a bunch of air in the balloon. And if all Tesla does is stall out and start to stabilize, they're going to open that balloon up and let some of that air out, which isn't good for you if you're a buyer of options, right? If you're picking up an option. Now, is Tesla something that might bounce there at that trend line? And if the options are inflated, which I'm sure they are, is it maybe a time to sell? Possibly. Are you wanting to own the stock? I guess there's a question, Karen. If you want to own the stock, then yeah, sell a put. When this thing looks like, go look at an intraday chart, when it looks like it's bottoming out, which is not. Actually, I've just forgot. I've got my intraday charts up here. Yeah, there it is right there. There's Tesla. There's the intraday chart. That's what it's doing right now. This is a 5-minute chart. 223. So it's down another basically 5.5, 6 points from where it is on the Omega chart, right? It's just bleeding. So if you want to buy this thing, let's see what options are going for. Let me detach that real quick. Just out of curiosity, Karen, you don't have to share if you don't want. I'm just curious what your intent is. I mean, are you looking to buy the stock? What's your strategy? Because that's a big difference. There's some of these Facebook groups and a bunch of them are rookies like, well, you should do this strategy. You should do that. So you should do this strategy. And it's like, the strategy should fit what the market conditions are. Right now, Tesla's tanking. I don't know that buying a put is the smartest of moves. They've got all these goofy strikes because of the split. But yeah, I mean, if you look at it, these are the Decembers. Where's that? It's at 225, 223. We have the at the money. There's 223.33. That's literally right at the money. They're going for $25. Those are the puts. So even if the stock settles in and just sits there at 223 and calms down a little bit, this thing would probably shrink by $2 to $5. I'm going to guess. I don't know exactly, but I'm just guessing off of 22 years experience. It's probably going to drop $2 to $3 if the stock doesn't move. If you buy calls, they're almost the same price. Interesting. That's basically at the money too. The calls are actually $1 more than $1 more than the puts. Huh. That's crazy. That's crazy. Oh, actually, there's the 220s. I'm pretty sure that I have the December 220s. I had an order out for 23, and this is the one that just hit. But yeah, if you're looking to sell Tesla, I would wait for sure. But if you want to own the stock, then you could sell a put. If it's down at 225. This little bit of a support level is about 215. I mean, you can sell the 210s for almost $20. So you do one contract, you're going to collect $2,000. But if Tesla continues to crash, then you're going to buy it at 190 would be your cost basis, which isn't terrible. I mean, if you're looking to buy the stock anyway, I'm just not a huge believer in Tesla. So, I mean, Elon Musk, yeah, but Tesla is, I think, long term. It's hard to say. I'm not. Maybe I shouldn't say this out loud. I'm not yet convinced that the whole EV movement is really that much better. I mean, sure, emissions are gone, but most of the electric grid comes from other emissions, right? So you're not really having a massive impact. And what about all the other stuff that's in the batteries, all the other stuff that's in the cars? What about the environmental impact from those? So I'm not convinced that the whole EV movement is really a net positive for the environment. I don't know. I mean, I think everybody wants a clean environment. Question is how to go about it. And do electric vehicles really accomplish that or not? And I don't know. I'd like to believe they do, but who knows? Time will tell. Oh, good. Awesome. Thank you, Karen. Um, that's awesome too. The that statement is see, I it's one of those things I look at and I go, okay, that's all. Let me share with you. Like she said, not looking to buy Tesla, just trying to understand what I missed so I see it next time. And that's where you have to be as a trader, the mindset that you need to be in. So that's awesome. Because and I do the same thing when I miss a trade. Well, I don't so much anymore, but I remember thinking that, like, what did I miss so that I can catch it the next time? So, because I didn't know, I started in 2000. It was April 3rd and 4th of 2000. So I know what it's like to start right at the peak of a bull market. A lot of people are still new to the market. There are a lot of people who've gotten in the last year or two, and they have no idea what they're doing. And that was me. They're trying to pick the bottom. They're trying to buy the bottom. Like, oh, did we bottom? No, we haven't. Okay. It usually is pretty obvious, and the bottom takes weeks, if not months, to form. At the bottom of the 2000 crash in 2002, it took, I think, 8 or 10 months, and an inverted head and shoulders showed up. Same thing at the bottom in 09 when it bottomed out. It bottomed out, and then it was 3 to 6 months later when it broke the neckline of the inverted head and shoulders and headed north. So both of the bottoms of those bear markets were put in with an inverted head and shoulders. So if you're trying to pick the bottom, then let me go back to the PowerPoint that we were talking about and what this whole hour is supposed to be about, which is patience. I keep telling people that. It's like, just be patient. The 2000 crash took 24 months, approximately, from peak to bottom. It dropped about 46%. The 2008 crash from top to bottom, if you go from the very peak to the very bottom, was about 18 months, and it dropped about 54%. And I think this crash that we're in the middle of right now, I think it's going to happen faster and be deeper than the last two for multiple reasons. One of them being that in 2000, not many people were trading online, right? Most people were still calling in orders because the internet wasn't that big. 2008, there was a lot more, significantly more people trading online. And today, pretty much just about everybody that trades is trading online. And because of the internet and YouTube and all these other places where you can go learn to trade, there's a lot more, plus there's a lot more people involved in the market, right? I mean, you got this huge influx of new traders. In 2020, there was the biggest influx of retail traders in history. And then you've got record inflation, you've got record gas prices, you got food going through. Everything is it is a perfect storm. You got a real estate bubble, you got a stock bubble, you got a bond bubble. Commodities were in a bubble, but now they've crashed. I mean, a lot of people get cranky. They're like, you're Debbie Downer or whatever they call it is, doom and gloom. And here's what I say. I can't control the large economy. I can only control my economy. I can't do anything about all the stuff going on around me. It's all that stuff is reality. Now, you can stick your head in the sand and be like, oh, I'm going to be a bull. I only want to look at the good side. Well, that's fine. But you're going to have a hard time finding it right now. There's just not a lot there. And you know what's beautiful? When you have a cost basis on Tesla of about $10 and one of your order hits 23, and the other one is possibly about to hit 27. And then I have all my capital back and a healthy profit, and I can leave one there. And if Tesla really tanks, I'm going to have a massive home run. I got the same thing happen with IBM. I don't know if it hit yet or not. Dang, it's super close. 8 cents away. So don't take my acknowledgement of reality as a negative outlook or doom and gloom. I'm looking at reality and I'm saying, okay, here's the big picture reality. How do I take advantage of it? How do I improve my economy? Because a lot of people's economy in the next year or two is going to get really beat up and really crushed. And if you know how to take advantage of it, then you can grow your economy while everybody else's economy is shrinking. You know what I mean? So anyway, don't take my doom and gloom as a negative outlook, because I see it very positive. In fact, my account, I'm almost going on 200% this year alone. So thank you, Brenda. Yeah, I saw you came in late. What's up with that? So yeah, I mean, it's one of those things that you learn to take advantage of, and more wealth is created in bearish economies and recessions than any other time. You're saying you forgot about me? Anyway, I appreciate that comment, Karen, getting back to that because it is awesome. And it's one of the things that when you see the patterns, and that's the key, is recognizing the patterns. And frankly, that's exactly where patterns in a flash came from. In fact, let me see. I had somebody emailed and said, I haven't looked at these. I don't, the flashcards, the whole purpose of the flashcards, but I heard that they weren't, okay, they are working. That's weird. Last time I was in here, which I don't go in here a lot, but so let's take where's a double top? There's a double top, which is what we had Tesla. The purpose of these flashcards is to train your eyes to see the patterns. Oh, it is. There's some kind of issue going on. I assume the tech team, they're aware of this. I know that. So if you have patterns of flash and you have an issue with the flashcards, the tech team's aware of it. I'm imagining they're fixing it. Curious if there's any other, maybe it's just that one, or is it all of them? It is. Okay, good. Well, now we know. I just found out yesterday, I think it was, somebody emailed in and said the flashcards weren't working. But y'all are familiar with flashcards, right? The purpose is, again, it's a training mechanism. So the important part is learning to recognize them. And when you can learn to see them here, then you can take advantage of them. So there's probably the biggest key, Karen, is if you're not seeing the patterns on the right side of the screen, that's why you're missing them. And it's going to happen. I've been 22 years. I can see patterns. I barely even have to look anymore. It's just like, I say in one of the things I have is 2 + 4 is how much, right? You don't have to think about it. You go through flashcards as a kid, you see 2 + 4 it's 6. Your brain doesn't turn on. And when you look at charts like I have for 22 years and you train your eyes to see the patterns, it's just second nature. You don't even think about it. Shocker. Just like you, Brenda. Anyway. So yeah, that's a good point too. All the the tall high rises. Oh, I thought you were talking about the candles last. Sorry. I'm just now seeing your comment. Tall high rises. Well, yeah, and there's the thing is that, and there's the other challenge to the whole electric movement is that, and there's the part that I don't understand. Well, I mean, I don't want to go into politics, but if you want to speed up the electric movement and get more electric cars on the road, then you have to keep oil cheap. If you keep oil cheap, then more people can afford a Tesla. I mean, people are spending on average basically $500 a month more now on just basic expenses like food and fuel. That's $500 a month that they could be putting towards a car payment for an electric car. So they're shooting themselves in the foot by saying, we're going to create this green revolution when they're destroying the green revolution by destroying oil prices. If you keep oil cheap and food and costs and stuff low, then families can afford to buy an electric car. I don't comprehend it. I can't understand the mindset. But just like the outlook of the market, I don't have any control over that. I can't control what the politicians do. I can only respond and react to it. So it doesn't matter what side of the aisle you land on. It has no bearing on my day-to-day life. So, but let's look at some other ones here real quick. BMY, there's basically a Head and Shoulders. I already knew that was coming, Brenda. This is not a pretty Head and Shoulders, but it's a little bit of a stretch. You got complex, a bunch of left shoulders, a head, and then a right shoulder. And it dropped off pretty quick. It didn't come all the way to the target, but got close. But now it's sitting here and it's just consolidating right there in that level. So BMY might be one. This is one I love. This was a pattern of the week a week or two ago. This is a broadening pattern. And generally speaking, broadening patterns are, not only are they rare, but they're difficult to trade because typically that lower line, by the time it gets down there, it's already dropped so much that the odds of it bouncing are pretty high, right? And it's already fallen a lot. This one has not. So I love it. In fact, I can't remember the last time I saw a broadening pattern, which, like I say, they're rare anyway. You see them, once every couple of years, if that. It's one of the most rare patterns out there. But to have one that's actually tradable, and this one right now, I'm keeping an eye on it because it's already broken through the entry point that I've got. I didn't catch it. There's a ton of them that I haven't caught because when you have 5 or 10 trades on, you can only take on so much. So, but I'm watching this because some other stuff's getting close to hitting. It'll free up some cash, and I might just keep going. But all right, Brenda, we'll look at the Qs. It's going to mimic the NASDAQ, right? So, oops, what's that? QQQX. And for those of you that, if you are, I thought I had lines on there. If you are a bullish thinker, and if you are new and you don't understand how to trade the downside, and you only are familiar with how to trade the upside, which is fairly common, especially when you get started, it does take some time and effort to wrap your brain around, okay, the stock goes down and I make money, and having and experiencing it, it can, it can wrap your mind around the axle a little bit, if you know what I mean. So it's a little challenging to grasp that. So if you're still new and you're looking just for stuff that you buy low, sell high, go look at the inverse ETFs. There's lots of them that, in other words, they will short the Qs, right? It's the SQQQ, the short QQQ, which means when the Qs go down, this one goes up. It's the opposite, right? So you missed to talk about patience, Brenda. That's obvious. Well, we've got, and this is, let's see, that's a weekly, there's a monthly. We've obviously got a little bit of support right there about, what's that, 280 or so, 267, 268, somewhere right in that range. That's the last level of major support. I mean, this is the COVID crash point, about 233. And I would venture to say that we're probably going to move down there. I think we're going to get there very quickly. And if you're not familiar with market history, Octobers are historically crash months. Some of the biggest crashes in market history have happened in October. So October freaks a lot of people out. So that's when the market's going to crash. So I wouldn't be surprised to see by the end of this month, to see the market, to see the Qs down here and retest that, which was the high from before the COVID crash, right? So we were in a nice bullish trend and we came up and we hit that spot. I would say that's a place a lot of people are going to buy. If not, if they don't buy there, then the longer term trend line that's been in place since 2015 is down here at, it's going to be about 220 or so by the time it gets there, probably. So definitely not a bullish look. Not looking pretty. One of the things going back to, not necessarily going back to politics, but it is important and it has a dramatic effect. I mean, I did have puts on CVX, and then OPEC, of course, comes out and says they're going to cut production. So what does that do to oil? Boom. What does that do to CVX? I got out. I only lost like $700, so it wasn't big, but I played them last week or the week before. So, but I got earlier when they did a triple top, I got beat up. I loaded up on a bunch of oil stocks because I thought they had peaked out because there was a triple top. All the pattern was there, and I got beat up pretty good. So a few weeks ago, when another pattern showed up on CVX and some of the other oil stuff, and it looked like it was rolling over, I loaded up on some of those and I got some of my money back. Don't get in that mindset. Don't be like, I got to get my money back. Oops. Money calling. What, that sound effect? Yeah, that was D-Dog. That wasn't a big one. I think I paid like $286 for those and they just triggered at $4. That was just part of it. I still got some there though. Which if you don't scale, and that's just a side point since I'm there right now. One thing, and you know what, I'll look at Amazon actually. That's what you wanted to see, right? That's not it. This is one that I've been playing in and out for some time, but I can't remember where. This was the original plan up in here, and the target was 125. But I've been in and out of this several times, and I just when it came back up here a couple of days ago, I added back in. I was down to like 3 contracts because I don't even know what I had. I've been in and out of this multiple times as it's dropping, right? I try to pluck some profits, and then I might get into 2 or 3 contracts up here and then add to it, add 3 or 4 or 5, and then I have 10, and then it drops and I take out 2 or 3 and then take out 2 or 3 more. And then it pops up and I've only got 2 or 3 there. And it's like, okay, fine, we'll add back into it. And then it tanks like this. And it's like, woo. And you cash some out because you reloaded it here. And then it bounces like this. I just had 3 left down in here. I was looking for it to come all the way down to 100, but it popped and came back up here. And I think it was this day, after it gapped down and rallied back up, or maybe it was yesterday, I reloaded some back in. You know what? And they were, I think I paid more. I think I actually might have paid exactly the same. I don't know. But that's going well right now. So I've got 2 different legs on Amazon. One of them at one price, one of them another. And I've got an order out there for one of them. And that's what I did with D-Dog. I've got 3 or 4 or 5 different entry points on it. But this was either yesterday or the day before. I reloaded it. I only had like 2 or 3. I think I had 5 contracts down here looking for it to break that 85. Then when it popped back up, I added more to it. And it just got triggered on that other position. So I just banked some profit on the smaller position. I still have some there. So if this thing does continue to fall, I'm still making money. Because have you ever gotten in that situation where you get into something and then you get out of it and it keeps going? That's frustrating, right? Well, if you buy it in bits and pieces and then like there's the Amazon actually. That just triggered. Sorry. I don't think I've ever had this many hit when I'm doing a web shop like this. But there's the beauty. I just got hit on Amazon and I still have some there. So if Amazon keeps falling, I'll continue to make money, but I just bank some profit and take some risk off the table. So if it turns around, I've already got some profit and then it's not hurting me as much. If anybody else here struggle with the fear factor, it's like, well, do I get in or stay out? Do I get in or stay out? If it keeps going, I'm going to leave money on the table. If it backs up on me, then I'm going to give back all my profits. You have that constant tug of war, right? By scaling and doing, chunks here, chunks there, piece here, you get in with a small, you dip your toe in the water in a really aggressive place, and then you can add to it as it goes. And that is a little bit of a mind warp when you first start, right? You're like, wait, I just paid $5 for that option and now it's $6. I don't want to pay more. I should have bought more. Well, yeah, but you didn't know up there, right? You were just taking a shot at it and hoping that it worked out. And if it didn't, then it doesn't cost you much. You do 2 contracts at $5 and then you add 3 more at $6. And if it goes to 10, who cares? You sell the 2 at $5. If there's room for it to keep going, you sell the 2 that you bought originally at $5. Now you've got the other 3 there. And it's one of those things that helps you manage the fear factor. So play with it, paper trade it. It definitely makes trading much more relaxing, if you will. So Amazon, okay, I'm going to run through these. I just realized we've only got 10 minutes. How come the hours seem to go by in like 20 minutes? So Amazon, a lot of these, and here's a good challenge to every single one of these that we're going to look at, is that a lot of them have dropped off big time. So as far as trading them right now, it's going to be more difficult to do something with them. Amazon, though, is, I don't know where's it at right now. I hate that. I know my resources are low. Got a lot going on right now. Is my camera not working? It's 114.54. I'm just gonna do this real quick. 114.54. Well, I think there's a pretty high likelihood. There is that support level about 115. So we could realistically on Amazon, see what the weekly looks like. There's the weekly. We've got that longer term trend coming into play. I think there's a pretty decent chance this thing's going to drop to about 100. So Amazon may, if we adjust this and we use that 115, was that 115.82 as a stop out point? And we put the target down here at basically, I'm just going to put it at 101. Keep the math easy. There's another thing, the calculator, 116.42. Whoops. And if you're not familiar with, I'm just going to call it 101. If you're not familiar with 3-to-1 risk reward, then I would suggest definitely go get the trial of patterns in a flash and go in and watch the bonus videos about risk reward. And what you will realize is that you don't have to be right more than half the time. You can be right 30% of the time and still do really, really well. Just to give you a quick overview, if you have $3 of upside and $1 of risk, you do 4 trades, you lose on 3 of them, you lose $1 on 3 of them, you make $3 on 1 of them. You lost $3, you made $3, you're break even. You were only right 1 out of 4 times. That's 25% accuracy rate, and you break even. If you're right 30% of the time. So if you're in that mindset that you have to be right, you have to pick the right stock, you have to pick the right time, you have to pick the right strategy, forget it. You don't have to be right more than half. You can be right 30% of the time and be okay if you use risk reward properly. That's the caveat, obviously. So that's a possibility right there on Amazon. Actually, I kind of like this because if we break down to those lows, then yeah, all bets are off, and this thing could easily drop to 100. There's not much there to stop it. So there is maybe some more potential. And actually, I might put a hook on Amazon down there, except they're coming out with earnings. When's their earnings? It is the 27th, I think, if I remember right, or the 29th. Apple and Amazon are 27th to 29th, I think. Okay, Karen, I'm going to look at the spiders first. Then we'll come back to Brenda's. Brenda's got a long list. She's got like 13,000 stocks she wants me to look at. But yeah, this is going to be kind of the same story. In fact, I'm even going to steal that one from up there because we really don't need it anymore. Definitely have, and yeah, this is a weekly chart. We've got some pretty significant support there, about 354. This is the SPX spider, is basically the same thing. If it cracks that, we're most likely coming down to 328 because there's not really much, if anything, to stop it from coming down there. 328, 330, what's that, about 333? So that's entirely possible. And I think it's actually pretty probable, unless some kind of news comes out and changes things. So the question becomes is, can you trade this? If it breaks down that, and this is obviously an old plan, but if it was to break down below that 354 area, let's just call it 330. 355.80, 330, so about 350. But there's the tricky part too, is that if it drops quickly down in that area, you got that part where are we oversold? That's what a lot of people have been saying now. We did get this 2 or 3 day bounce, and now we're back to the downside. And you can see here, we got this big drop here and it bounces for 4 days and then it continues. That's one of the things that makes trading so challenging, right? Especially in environments like this. Same thing here. You got this big giant tank right here, and then for 4 or 5 weeks, it goes sideways. One of the keys to becoming successful long-term is to recognize, okay, we had a big move. We're probably going to settle it a little bit. Looking at the odds. Okay, what are the odds of it continuing? The odds of it continuing to fall. If we break that 350 level, what are the odds it's going to drop to 330? And if it does, how quickly might it happen? And usually, especially trading options, when you have to add the time factor, go, how much time do I buy? You want to buy a little more than necessary, but not more than you need. I see people that right now are buying leaps, and it's like leap calls. And I'm like, oh my gosh, people, learn a little history. The market is probably going to continue lower. The odds, everything is pointing to that. We are headed for a really, really rough road the next 1 to 2 years, maybe 3 or 4. I just saw an interview with a guy that he's overseas. He's in, he was in Dubai at the time, but he's been around for a long time. And he expects a worldwide depression in 24 and 25. And he laid out a really solid argument for why that's probably going to happen. And I can see where he's coming from. And you look at the big picture and you look at all the events going on around the world and all the craziness happening. I think it's very possible. So, again, I'm not worried about it. I can't do anything about it. I can just manage my own stuff. So it's just really, really, really ugly. So, but learning to recognize those points where it's good to pivot, right? Because I think if we do, especially if that thing drops quickly, if this month, which again, October is typically crash month, if this thing does crack right through that 354, I think it probably would move quickly to 330. And if it does that, that's where I would be bailing on everything that I have bearish, or most of it, I should say. Maybe not everything. Depends on what it looks like, right? You never know. I mean, looking at the chart now, I would venture to say we're probably going to come down to that 354 and maybe settle in there a little bit, or at least test it somewhat, right? We'd probably have a little bit of a bounce. That's what I would expect. Now, it's possible that it just goes crashing right through it. But if you're trading the downside right now, because it's been beat up, you still want to be somewhat cautious if you're entering trades right now. So I would look for things, and that's one reason I love BMY, because even though it could go because it's a drug, a lot of pharmaceuticals can turn bullish in bearish markets, but this thing's got a bearish look to it. So if the whole market tanks, a lot of times everything just goes with it. So I look for things that are more elevated. If someone's already been beat up, like Tesla, this is where I wouldn't enter Tesla now myself, because it's already been beat up. Look for something that's not been beat up yet, if you think things are going to continue to drop. AMD, wasn't that them? I'm getting them confused. Yeah, that's them. AMD came out with news today. I don't know what it was. They just said things were bad, which shouldn't be a surprise because they're in the same industry as Intel. And last quarter, Intel came out and said, we're getting destroyed. Massive, massive change in economic activity. That was Intel's earnings last time. FedEx comes out and warns. This is another thing. If you look at the big picture, FedEx went from, and I've been beating this to death lately because I think it's so profound and it's such a massive, massive red flag. FedEx came out with earnings, what, 2 weeks ago? Yeah. And a week before that, they warned. Wish that I had puts on FedEx. There was no reason to be in it except for this double top up here. But I mean, who doesn't wish you to have puts? I mean, if you had the 200s, you're sitting on, $4,000 per contract the next morning. But FedEx touches something like 26 or 28 industries across the world, right? Because they ship. They touch a lot of different industries. And they went from the quarter before having a rosy 2023, they had rosy outlook. They said 2023 is going to be great. 3 months later, they came out and warned and said, not only are we going to miss this quarter by like 20 to 40%, our earnings, but we're not going to give guidance for 2023 anymore. They went in a 3-month period, which is really short when it comes to the big scheme of the market, right? 3 months is not long. They went from rosy to, hey, we're looking good, to, we're not going to tell you because we don't know. And we're going to miss this quarter by a lot. That is massive, right? I mean, for FedEx to come out and say that, and then Intel said the same thing. We had a dramatic change in economic activity. In other words, sales have dried up big time. AMD's in the same boat. I know, thank you, Brenda. And there's not much to do with AMD right now. I wouldn't touch this thing with a 10-foot pole going bullish because of the market conditions. Not long, not even intermediate term. I may be really, really super short term if it bounces. But the next level is 57. Right. So it's still got about 4 points where it probably will drop, and it might dig in at 57. But if it digs in at 57, it's also broken that trend line that's been in place for 5 years. If it can't hold 57, the next level is right about there. What's that? About 50, basically, which is a good round number. So yeah, I wouldn't, and it's already moved so big today, I wouldn't really be doing anything with puts because it's too far gone, right? This is where it's important. And that's why I appreciate Karen's question is, how do you get ahead of this? How do you get in front of moves like this? And it's frustrating sometimes because you look at it and go, I missed it. It's okay. Especially when you trade options, you don't need giant moves to make a really, really killer rate of return. So sometimes all you need is these little ones. Probably the same picture. No, it's not. Oh, they already came out with earnings. There are some. NEM has a double bottom. I highlighted that as a pattern of the week last week. So if you're looking for something bullish, look at NEM. Micron has broken that trend line, which is fairly solid. Basically has about 4 hits on it. It's broken down. It's hit the upper side. Somebody tech calling. We can wait. Holy cow. Seriously, we're supposed to be done. It's already 10 o'clock. So yeah, this is another one. This is one actually, if it breaks back below that line, this one may still have some potential. If things keep falling, I mean, I would put a stop just above that line. And I put a target down here about 45. I don't have time to go in the thing, but that's, I mean, just a quick glance at it. That's what I'd be doing. If you're looking, if you think this is bearish, I don't know what their earnings were. If their news just came out and they had earnings, then it looks like it was actually fairly good because there's some pretty solid volume going into an upward move in this thing. So I haven't looked at Micron for a while, but the chart right now looks bullish. Kind of. I mean, it looks more neutral, but it's got a solid volume push to the upside. And it's, even though the market is crashing, this thing's held up relatively well. These are the ones, this is a side note, that when the market stops crashing or settles in and slows down a little bit, these are the ones that will probably take off quickly, right? If it's holding a relative strength while the market's crashing and it's holding steady, when the market turns around and bounces, those are the ones that typically will take off first, right? Not always, but typically. NVIDIA, and then we're going to wrap because I know Miguel's probably like, oh, you're going over again. Well, we're digging in right there. Oh, see, this is the ones, these are the type that are really, really hard because it's literally crashing. It just jumped from 189 to 123. And it's got a solid support level at that spot, about 120. But if it doesn't hold that, what was that? Oh, that's that one. Okay, I'm gonna, yeah, NVIDIA, this is a tough one. But if it cracks that level, we're looking at probably 72. That's big. I mean, that's huge. I love the looks of that. The only thing I don't love is that it's already dropped off quite a bit. That's the hard part, is that the odds of a bounce are pretty high. That's about what I would do with that. And then you can put in your entry point. So, but here's something to consider too. I'm going to give you this earnings trade real quick that I'm attempting to pull off again. So IBM and Tesla, I already alluded to with Tesla, right? If my other one hits at 27, which is about $3 away, if Tesla drops another 4 or 5 or 6 points today, that'll probably hit. I will have not only all my initial capital back with Tesla, but I'll have a healthy profit and I'll still have one contract on the table, which I will leave there and hold over earnings. I've done the same thing with IBM. IBM announces October 19th. Expiration October is October 21st, 2 days after. I went and picked up 20 contracts of these, and I've got an order to sell 15 of them at a tiny profit. I think I had, it's a small trade. It's only $1,900. 18. I think I have 1880 in the trade on all 20 contracts. I've got an order out there for 15 at $1.27, which will bring in like 19 or 1920, something like that. So I'll have a $25 or $30 profit. And then if IBM comes out and has bad earnings, I've got 5 contracts sitting there that I didn't pay a dime for. With the drop that it's had, it's probably a little late to do that now. May not be, but just that as we're about to kick off earnings, that's something to keep in mind. In the first quarter, I did it inadvertently with Home Depot, where I had played in and out a bunch, just like I did with Tesla. And then I realized, oh, earnings is in a couple of weeks. Here's where I'm at. If I can get, I went and ran the numbers and go, here's how much I initially started with. And it's the same thing with the Tesla one. I have a bunch of profits sitting there. I was profitable, even leaving one contract there. And so I left the one on the table, held it over earnings. It was $14 the day before earnings. They announced they came out with earnings. The stock got hammered. The puts were worth $24 in the morning. And I bailed on it. I made an extra $1,000 just by holding one contract overnight. So if you find a good pattern, if you find a good chart, and you know when earnings is coming up and you have enough time to possibly do something like that, keep it in the back of your mind and go, hey, I've already got all my initial capital back. I put $5,000 into the trade. I can cash out 6,000 of it, have $1,000 profit, a 20% return, and leave one contract there, or 2 or whatever number it is, right? Run the numbers on it and make sense of it. And then if they come out with earnings and it moves even bigger, then it's a home run, right? You went from a nice 20% rate of return to maybe 50 or 100 or 200, depending on how big it is, right? Home Depot did it. I tried it with PayPal last quarter, and that one didn't work out because it didn't move enough. It didn't move enough before earnings. So I just closed out the entire trade. I had like a $200 profit on the whole thing. If I would have left one there, it jumped a bunch, actually. I bought calls on that because it looked like it was going to possibly pop, and it did pop. And I would have made a nice profit. But I couldn't get all my initial capital back and still leave one there, so I didn't do it. I just took all my money off the table, took a little profit, called it good. And it was cranky the next day. But I didn't want to take the risk because I would have lost everything had it gone the opposite way. So you got to weigh that risk reward. That's really where you have to be, is get that mindset where, what is my risk? What is my reward? Here's a trade I'm in, and IBM, that wasn't, I still got 8 cents to go. If it moves enough to hit that one, then I'm going to be super happy about that, because now I've got 5 contracts on IBM sitting there with an expiration 2 days after earnings. If it gaps down to $100, I think I have the 110s. If it gaps down to $100, that's $5,000 of gravy that I just banked. But that's a big if, right? And I don't know. But the reality is I've gotten all my initial capital back, so I essentially have no risk on the table. Does that make sense? I've talked about it a little bit over the time, but I've gotten Tesla, I'm in a position to do that with. IBM in a position to do that with. So I will let you know how they turn out. Hopefully, I'm hoping that when IBM hits here shortly. If it does, like I said, I'm going to be breathing easy. So, and hoping that they have a FedEx movement. Anyway, all right. Yeah, I wish. That's the thing. I mean, going back to the theme is being patient and waiting for it to hit, right? That's what we started with. So let me wrap up and let Miguel get out of here. Thank you. Thank you, Helen. Thank you, Karen. You're welcome. I always have fun. And just remember, as you should know by now, that trading is not easy. But the beauty is that once you get to where you want to be, and I'm assuming you all want to get to that place where my goal went from a few years ago, went from being profitable to trading in a calm, cool, collected manner. And once I shifted my mindset to, I want to make money, to I want to trade, I want to make good decisions, I want to trade in a calm, cool, collected manner to make good decisions. Once I did that, that's when things changed for me. So focus on making good decisions and staying calm, cool, and collected, and trading in a way that allows you to stay in that place. Because once you get there, the profits take care of themselves. But as you know, trading is difficult, right? It's challenging. It's extremely challenging. It's one of the most challenging things you will ever do. But it is well worth it. And just remember that if you're going to fail at one thing, just do not quit. Just do not give up. Just keep going. Y'all take care. God bless. Bye-bye. For now.